Hello and welcome to Livewire's Buy, Hold, Sell. My name is Chris Conway and today we will be analysing the extremities of the small cap spectrum. These are stocks that have absolutely shot the lights out and our fundies think they will continue to do so, as well as 3 stocks that have been absolute dogs. Maybe there's some value there. To find out, we're joined by Yeoh from OC Funds and Emanuel Datt from Datt Capital. Emanuel, I'll start with you. Sure. IDP Education is the stock that we'll talk about first. International education organisation offering student placement in a range of countries. Buy, hold or sell?
IEL is a sell for us. It's basically trading on too hefty a valuation and it's basically priced for perfection. Yep. We've seen consistent falls over the past couple of years from its peak, and it's down about 58 or 60% from its peak. Ultimately, the economics of the business are heavily dependent on immigration, ultimately, and Australia's continuing attractiveness as a destination for international students. I think there have been some question marks over what the future policies may be from the federal government around that, and that sort of, I guess, shaken investors would be the best way of typifying it. So for us, it's not a risk we want to take, so we'll call it a sell.
Aaron, the share price has tumbled 18% year to date, adding to those falls that Emanuel was talking about more broadly. Buy, hold or sell for you?
IDP is a hold from our perspective. We think it's a very high quality business, but I do agree in the near term there is a lot of sort of pressure from a regulatory perspective. The Australian government has a target to halve net migration in the next 12 months. That's still outpacing their targets at the moment. So we're just a little bit wary about the potential risks in the near term. So good quality business, but earnings probably a little bit shaky near term. It's a hold.
The next one we'll talk about is Bapcor. This one was absolutely smashed of late when it came out in the news that the soon-to-be CEO was deciding to not become the CEO just 2 days before he was supposed to take the job. Never a good thing for the market or for the share price. Aaron, I'll stay with you. Buy, hold or sell?
It's had a torrid run, but it's still a sell from my perspective. It should be a fairly defensive cash flow generative business, but it's gone through significant management change over the last 24 months. It is literally rudderless with no CEO and CFO at this point in time. It's a business that's predicated on strong relationships with suppliers and customers. I think there's just too much near-term risk for me. It's a sell.
Emanuel, the share price down 25% just a few days ago on that news that I was just talking about. It's only down 14% year to date, so not so bad over the slightly longer term. Is the weakness a buying opportunity for you? Is it a buy, hold or a sell?
It's a sell for us, Chris. And why that is that it still trades at 20 times NPAT despite flat top line growth. And of course, there's the issue of the revolving door in the C-suite, where we've seen the chair not putting themselves up for re-election. We've seen the CEO, the CFO, the CEO-elect also step down. And so effectively, as Aaron mentioned, you've effectively got a company that's rudderless with just an interim CEO and CFO team, meaning the ability to make an impact on the business itself is quite limited. I think the market does sort of expect there to be a write-down of goodwill and inventories potentially, and I think the company did sort of allude to that fact in their latest trading update. Clearly a risk that we don't probably want to have exposure to, so it's a sell for us.
Makes sense. Next up, we're going to talk Cettire. It is another stock that has been in the news of late, not always for the best of reasons. Luxury online fashion retailer. Emanuel, I'll stick with you. Buy, hold or sell? How many $400 jumpers are you buying in Cettire?
Yeah, it's a sell for us again, Chris.
Yep.
Why that is that I think that the business itself has experienced some positive externalities in the sense that some of its global competitors have actually sort of slowed their operations considerably, and Cettire has, whilst it's managed to benefit, I think in the short term, I don't really think it's a sustainable model over the long term, given there are sort of big question marks around the provenance of where it gets its stock, for instance. We have difficulty really sort of understanding their accounting treatment of certain aspects of the business. It's in the too hard basket in a nutshell for us, and we'll call it a sell.
Great. Aaron, what about you? You look like a fashionable young man. What do you think? Buy, hold or sell?
I actually disagree with Emanuel. Okay. Cettire is a buy from my perspective. Again, we like the fact that it's a founder-led business. Dean Mintz still owns 30% of the business, still heavily aligned with shareholders. You know, he bootstrapped this business from day one to IPO. And I think he runs a really sort of focused business where if you dig underneath the surface around how he has sort of built this business and you speak to a number of other competitors, only then do you realize, you know, how this business is much more efficient than its peers. I think there's a significant barrier to entry for someone else to come in and procure supply, get the supply arrangements that Cettire has. They've literally done this with having no website. I think it's testament to the persistence of the management team. In addition to that, yes, its major competitor Farfetch has gone through significant turmoil in recent periods. It's gone through a liquidation process, subsequently been acquired by a Korean e-commerce company. We've spoken to a few different suppliers out there as well, and I think that's really benefiting Cettire, and will continue to benefit it with regards to procuring not only, you know, a wider range of supply, but a deeper range of supply of the products that people are after. And so we think, you know, the opportunities ahead of it are still very compelling, and the numbers will do the talking, so it's a buy. Speaking
of the numbers, the year-to-date share price, it's up 5%, but that's well down from the February highs. It's off around 36% from those highs, so it makes for interesting reading, no doubt. Again, my favourite segment of the show, we've asked the gents to bring along a stock that they particularly like at the moment, obviously a big growth stock. Aaron, I'm going to stay with you, one that has shot the lights out. You think it will continue to do so. What have you got for us?
GQG Partners, the ticker is GQG. They're a listed global and emerging market equity manager out of Fort Lauderdale in the US. The business has only been around for 8 years and it's grown to roughly over 140 billion in funds under management. It's founder-led, led by CIO Rajiv Jain, who still maintains himself as the largest shareholder with around 70% of the shareholding. The business has continued to invest significantly in its investment team and distribution capability as well. All of its major funds are performing extremely well. They've shown an ability to outperform through all market cycles. The stock is trading on 11 times PE, and we think that they can continue to deliver double-digit growth over the medium term. We just think it's too cheap, so it's a strong buy.
GQG Partners, fantastic. Emanuel, last word for the day. What have you got for us in terms of a stock that has shot the lights out and you think will continue to do so?
My pick would be Jupiter Mines, that trades on the ASX under ticker JMS. Jupiter's risen about 60% over the last month and a half. And why that is that we've seen S32 or South 32. They have asset called Gemco that's based in Northern Australia. And unfortunately it was right in the path of Cyclone Megan. Right. So there was a tremendous amount of damage that was sustained. It was actually a major outage for the global manganese market itself, given this particular Gemco asset produces 12% of global supply. South 32 have actually come out and guided that this will be at least a year-long process to that's a preliminary estimate, so it could extend. That's our sort of base case. Ultimately, we think that structurally, this is a huge change for the global manganese market, and we've seen prices more than double actually over the last 45 days or so. And we expect this situation to sort of persist, and we think that the manganese price is going to remain sustainably higher for at least the next 12 to 18 months. And then the question comes down to what's the best way to capture this dynamic? Yep. And it's by investing in a producer like Jupiter that has a majority share in what's a tier 1 mine, sort of lowest in the global cost quartile, and extremely high quality asset, 100+ year mine life. And importantly, it has it's an existing producer with existing relationships with buyers and its own marketing chain.
Thanks, Emanuel. Thanks, Aaron. Some great picks there. If you enjoyed that episode of Buy, Hold, Sell as much as I did, make sure to give it a like. Don't forget to follow our YouTube channel because we're adding lots of great content every single week.